Hello, everybody. Mr. Valuation here. Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool. Since I'm always talking about valuation and often the dangers of overvaluation more recently, especially with tech stocks, I wanted to share with you a kind of a short, quick video today that just covers what can happen when you own overvalued stocks and how quickly it can happen. So let me go ahead and get into that and show you. It started with an article that I read out of the Motley Fool that it just caught my eye. It said, why Trade Desk and Magnite brought down the NASDAQ on Monday. And the idea here was that, whether people you've been following it or not, I'm a value investor, and value investing has really kind of taken center stage here more recently, and growth stocks especially have begun to falter. And today with this video, I've just got two real quick examples of how that could happen. Programmatic advertising has been kind of a hot commodity here, and the Trade Desk is a stock that deals with that quite extensively, as well as Magnite. So let's look at these stocks and let's look at what happened to them just today. Now, the first thing I want to point out, this is Magnite. I want you to notice that it's a $4.1 billion company, relatively small. It's had kind of a spotty record historically. There was some periods of really robust growth, and then they strung together several years of losses. You can see the stock languished here. And then we got this huge increase in 2020, which obviously is actually, this company, I guess you could say, benefited, if you will, from the COVID pandemic, because there was a lot of advertising, especially online advertising being done. And then they're expected to have another really great year this year. So what happened was their stock skyrocketed from a low in September of 2020 of $6.95. It ballooned up to over $48.87 by February. And that was a huge, rally over this period of time. That's over a 600% increase. But I think what you should also see here, and what I really want to talk about in this real short video today, is the idea that the stock had become overvalued. So, starting in February 26th, its peak, which was its peak, it initially dropped 26.7%, but it did that in February, March, April, and then into the first week of May. Okay, so it took a little bit of time, a couple of months here of time for this drop to happen. But today, if you get a quote on Magnite today, you can see that the stock is down almost 20% just today to $28.76. So if I, try to touch that for you, there's 30. So the stock is falling down, just in one day, roughly down to this point here in the graph, which I don't have anything to point to, so I can't point to it. But the point is, it's still an overvalued stock, in my opinion, even after this second drop today. But the reality of it is, these companies, can drop in quickly. This is the world's largest independent sell-side ad platform, where they, this is their website, by the way, where, will help you win across every channel, any format, and so on. And it was obviously very, very hot, and its operating performance was very, very good. And this got investors very excited, drove the stock price up to incredible numbers. If I look at price to sales, their sales began to increase dramatically, but they got way ahead of themselves on price to sales. So, the reality of it is you can see clear overvaluation here, but it's hard to convince investors that are getting this 500% and 600% increase that this won't happen. All I want you to see now, I don't know what this stock could rally 50% to the upside again tomorrow, but clearly you can see that there's been pressure and a tendency over the last several months, and now that seems to accelerate a little bit, at least temporarily. And by the way, they actually reported a pretty good earnings announcement. And the next one is Trade Desk. And Trade Desk is a relatively large company, $32 billion company. And if we look at it, from a standpoint, it's a media buying platform, and this is why, they obviously benefited during, the COVID, where people were online, not going out very much. So their advertising revenues did extremely well. And you can see that they did suffer a little bit during COVID, actually, they had a very good year in 2020, let me say that. But then since then, they've had a little bit of trouble. Their earnings are actually expected to be down in 2021. Now, initially, we had this very strong rally, and notice that it started right during the pandemic, and we had this surge in earnings growth here. And I want you to note that, this company was up 367% in just a course of about 3 quarters. And then, since then, since November of last year, coming to the end of the year, the stock has fallen 26%. But then if I get a quote on it today, it's down another 25% today alone. And that's a real important issue here. The stock has fallen that much. Now, if I look at forecasting here, I do want you to see that the company's earnings growth has actually been increasing over time here. Expectations have actually gotten better for the company in almost all cases, but the headwinds of overvaluation were just too much. So now we're looking at trade desk trading at $493. And the company even announced a 10-for-1 split, by the way, which will get it down into that, $40 range, if you will. Of course, today the stock, that would be a $49 stock if they split 10-for-1 today. But the point is, here the stock was $661. So if I go down to that, $400 range, just to try to give you a perspective here, let me get that exact price again, $493. So this will be pretty close right here. There's $481. So you can see that the stock has fallen that much, and that's in a single day. Okay, and almost approaching fair value. Now, if it ever got down to fair value, I believe this would be a very interesting stock to look at. It's expected to grow at 10 or 12% a year, and long term it's expected to grow at 25% a year. So if I mix these two together and looked at, current estimates in growth, if I could get it down here at a reasonable price, this could be a very, very attractive investment. I do want to make that clear. I think the same can be said about Magnite. If I'm looking at Magnite, it's expected to grow at 20% a year, over the longer run. The estimates for the next couple of years are very strong at over 30% a year. But again, the problem is the stock is way ahead of that value, those valuation thresholds, even after today's drop. Both stocks are still expensive. So I just want you to be aware that when you see these periods of overvaluation, this reminds me uncannily, it looks a lot like Tesla. It looks a lot like Apple has for the last couple of years. There's a lot of, growth stocks, tech stocks that look like this, but there's starting to be a kink in the armor. So all I'm saying is beware, pay attention, and start watching these stocks with valuation. If you own them, now might be a good time to start shrinking them. And by the way, there's another issue. And that issue is if the capital gains tax increases dramatically. The Wall Street Journal had an article today, and that does go up, from its current 21%, I guess, up into, 28% or higher. That increase in capital gains tax, whatever it turns out to be, could also be a stimulus for people to start selling some of these stocks before that tax goes into effect, which is just another potential catalyst that could ratchet these stocks down significantly. So if you're ever going to look at taking some profits, you might want to at least consider that now. Anyway, this has been Chuck Carnevale with kind of a quickie video for you today. Hope you enjoyed it. I just want you to see that when you're dealing with these high-priced stocks, the tide can turn, and it can turn very, very quickly. Down over 20% for Magnite today, down over 25% for trade debt. So when you own high-valued stocks, be aware of it and be prepared to take action if necessary. Anyway, this has been Chuck Carnevale saying thanks for watching. Give me a like if you liked the video, ring the bell, subscribe to the channel if you haven't already. I want to thank everybody carrying us over 21,000 subscribers. We're just getting started. We've got a lot of stuff in store coming up. So I hope you stay tuned, and I hope you join the family here. Thanks for watching.